Well, hello, folks. I'm L.A. Little, and this is your daily NeoTA wrap, where we take a look at these markets and we do it from a neoclassical perspective, each time asking ourselves what happened today and what does it tell us about the coming ones. I do this show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time and archived on YouTube under the channel L.A. Little. You can catch it there anytime, any place, any device. Your choice. As far as YouTube, as far as the devices, I really appreciate. I've heard from people that tell me they do this, and from those I'm sure that do that I don't hear from. But I appreciate you spreading the word. The easiest way, with the like buttons that you see there on YouTube, you can easily share it on Facebook, on Twitter, elsewhere. And I appreciate that in advance. Anything you do to help us helps you. So let's get to the show. As far as the markets, big trading day, big turnaround. Spikes higher on the Fed minutes, 2% on the NDX, 82 points. The range today, it was like takeaway city out here. Takeaway bars everywhere. 110-point range on the NDX, 82 points higher. We had the index, the Dow Jones, 274, almost 275 points higher, 1.6%. S&P up a 1.75%, 33 and 3/4, back to 1969. I mean, you just go down the list. And then what's really interesting is that you had the closing numbers. Actually, these closing numbers don't look right to me. They were down on oil. Dollar was down, but gold actually finished higher. So I'm a little confused here about why I see on these particular numbers. Same with bonds. So I think these actually were green. I'm not sure why they're showing them as red here. Unfortunately, I'm probably going to have to switch to a different source at some point because I get a lot of misquotes anymore. I will notify them, but I don't know if they'll actually fix them. I haven't had great success in getting those numbers fixed. As far as the move today, it was all about the Fed and what the Fed said and what the Fed did. And basically, the Fed sent a meeting notice to those who will short the dollar and said, not short the dollar, but buy the dollar, right, to strengthen the dollar, and basically said, there's a persistent shortfall. This was from the minutes. Persistent shortfall of economic growth and inflation in the euro area could lead to a stronger dollar and adversely affect the U.S. external sector. Appreciation of the dollar might slow, maybe we need to spell that right, might slow the gradual increase in inflation. And, the Fed always talks this doublespeak stuff, but, if you take that for face value, what are they saying? Currency wars. We can't have everybody else depreciating and us going up. We've got to stay competitive. And so how do you do that? Well, you don't raise rates. That's what the market loved, right? That was why it shot up like, it was going to the moon. Speaking of going to the moon, let's pull up the chart and see what it looks like. Takeaway bars I was talking about earlier. Now, the caveat tonight, and actually, I had, talked about the possibility come down here testing and reversing, and I'll show you something here in a second with respect to that. But this number is 1926.03. You got the 1925.25. Volume expands on the day. Now, a lot of that volume came into the upside, so I'm not all that concerned about it. But you do have higher volume now on this low. But you do expand. You do a takeaway bar. This now has done what it needs to. All right, got down here, buyers disappear, sellers disappear, buyers show up, and you go spiking back to the other side. So takeaway bar, big, huge reversal. This thing's going to carry now. So finally they've got they got a low here that will stand for a while, it appears. And speaking of that, it looks the same pretty much everywhere. Dow Jones. Each one of them looks the same. They all put lower lows in, higher volume, with the exception of the NDX. NDX actually had about this, had higher volume but didn't hit a new low. And then the Russell. Now the Russell was dogging it all day and was trying to break. It was down, pushing new lows. The rest of the market was trying to, look like it wanted to try to work higher. And then about an hour before the Fed, it did start to work higher. And then eventually the Russell turned and started joining them. But the Russell left volume here at the lows, and that's a clean volume leave at the lows, which tells me the Russell's probably not done. If you look at the Russell now, key thing we've been watching here is the Russell on the weekly. If you look at it on the weekly, you're going to have higher volume at these lows most likely. I mean, you got 2.03, you got 1.1. This is Wednesday. That would be 330, say about 330 5 times. That's 15, 16, right? 16.5. Actually, it's going to have less volume. Looks like it will have less volume. So that's going to be a good test of the lows if it holds. And with the reversal today and with probably some follow through tomorrow and even potentially Friday, you now have the setup to hold these lows one more time and not go to bearish, which of course is a big deal in my opinion. So technically, right, on just looking at the indexes and also if we look at the sectors now, that setup was there. The question is this sustainable? And this was a note that I wrote to the members this morning. Before the market opens, I always send out, morning broadcast, and I said, yesterday we had talked about in the notes that I send to them that we talked about an earnings setup this weekend. Actually, we talked about it on the weekend broadcast to members, and I said we would sell off into the earnings, setting up to buy the news scenario, or would we instead rally into them and set up to sell the news? Well, the first question was answered yesterday in that, we got part of that answer in that we sold off and we barreled down, right? Now, today, it looks like we're getting the other side of the question answered, and that is that, I had said that the strong financials are the ones to first report, and I wouldn't be surprised if we get one more scare. That was the push down this morning before the end of the week to set up the next bounce that everyone feels is the start of another leg higher. So the question is it sustainable? Well, I just gave you my answer. I don't know that it is. And I don't know that it is because I think the biggest question out here is going to be earnings. It's, the Fed minutes come, they go. You can get huge moves off of them. Did anything really change today? Well, yeah, they started yapping about the dollar, and that's going to slow the dollar down. And, of course, that's going to put strength into commodities and, of course, initially into equities and into even some of the foreign markets, which have been lagging. But I don't know that it has that sustaining power if the earnings do not come through. Now, if you look at the data out there, FactSet, earnings are about half what they expected, 4.5%. But is the dollar going to eat into them is one question. And it's the second question, and that's what the Fed was talking about. And the second question is, are we going to see any sustainable demand for products? Can they increase the top line? Because if they can't, I think they're going to have a hard time meeting their numbers. And we're already seeing that in some places like the chemical sector, which I highlighted previously. So, in a nutshell here, it looks to me like, yeah, we got a huge bump. And yes, this is probably going to push higher. Question is how high will it go? And if I bring up the S&P 500, I would look, the breakdown bar was here on October 1st, right? This was the first breakdown bar. Remember, we went up and tested and failed to get over it or to stay over it. The other breakdown bar was from way back here. We're back up over it. We're coming into this one. I expect we'll probably get over this and we'll make it to the top of the next one. That's going to be the real test, is up here. If you can get over this, then, I got to hand it to you bulls. You've done it again, right? You're going to go test your highs and maybe you're going to break them out, or maybe the range is just going to be the big range. But this, to me, will probably be the key test, and I suspect we will make it up there now. It's probably going to take a little while, but that's, well, I say take a little while. You just had, the same amount of points that it take to get there. You had that in the afternoon today. So, maybe they make it tomorrow, but that would be one heck of a run. I suspect they'll just whittle their way up here as earnings get reported next week, as the better earnings come out, and they'll go up and they'll make that test, and then that will be the key. Because the question will be is, can you make higher highs, or do you get a failed bounce? Because the failed bounce is going to be the big deal. If you fail on the bounce, then you've got some sort of a larger issue. If you can hold, then it's a totally different story. And so here's the weekly. I pulled it up just to see what the volumes look like here. Doing 188, got 114 already. So that's, what is that? 30. It's a little less than 30. We'll call it 28 maybe, and multiply that out. That's 140. Going to have lighter volume here as well. It seems like I'm doing the numbers wrong though, because it looks like there's more volume there. Let me do it one more time. So actually, let me just get a calculator real quick. So in summary here, as I'm doing this, it looks to me like, yeah, you got a bounce. Yes, the bounce is probably going to continue for a while. The issue is going to be is like where or how does it deal with those highs when we get up there. And let me finish this right quick. So it's about 191. So 191, yeah, it's going to be just slightly heavier volume if that's true. So we're going to leave volume down here one more time, even on a weekly. Okay, so that's what it looks like. And when I look at this, I think we're going to have some more push, and then we're gonna see if the bounce fails or if it actually gives us another V-shape push, forever. And I'm not, earnings is not something the Fed can play with. Yeah, they can make the dollar cheaper. They can make bonds cheap so companies can create their financial engineering. But they, outside of that, there's not a lot they can do about selling stuff for companies or making their margins or any of those other things. And so that will be the key. All right, let's pop over into a couple other things here, and then I'll take some members' questions, and then we'll probably take a look at some earnings, because the earnings are just starting to come out today, so I want to look at a few of those. It always pays to watch the early ones and see what the market does with those. So the world markets aren't going to show anything really. Let's look at the major sectors here, see what they look like. And let's just kind of pop through them and see. So the IBB, remember, it was still hanging, trying to test the lows. Got down near them. No new low here. Pops around volume there. It's going to go test the highs again. So that one's on the upswing again. IYT, test under, back over, has less volume. That also looks like it's going to, it's finally put in a bottom it can bounce from. If I look at the chip sector, which has really been hit hard, under, over. Now this one got down into those lows from August, which I was thinking we might get into with respect to the S&P and the indexes. Got down into those areas, not enough volume, right? It's flipping around. That one's going to get a nice little spike back up as well. XLB, now XLB, more like the indexes, puts more volume out at the bottoms. Yes, it can bounce, but it's probably just a bounce. XLE can't even lift. When I talked earlier about the commodities, this one leaves low at the volumes and it looks like another blowout volume at the lows. When I was talking about the commodities, the one commodity that doesn't seem to have any friends right now is the oil and the gas. Here's the USO, which is a proxy on the proxy ETF for the oil market. Down, breaks down, gaps down, never does recover. If I look over at the UNG, the natural gas down here testing all these lows, and looks like it's fixing to break them all. So natural gas, oil, those still hurting, and as a result, anything in those like the XLE we were just looking at, yeah, they can bounce, but it doesn't look like it's done. As a matter of fact, you just left volume at the lows. Let me see what the OIH looks like while we're here. Same thing, volume at the lows. It did reverse hammer. That one can bounce as well. XLF, this one actually had a nice turnaround. Didn't make new lows, even though it put more volume out, but that one looks like it can run higher. XLI actually tested the lows and had lighter volume. So that looks like a good test of the lows. That one can get a nice bounce, does a takeaway bar on the way to start that bounce. XLK, lower lows, not much more volume, and that one also looks good. So as you get the drift here, things are looking pretty good. XLP breaks out. Let me grab the XLP. So the XLP actually breaks out, gets over the highs. That's going to transition trend back. Actually, it's going to transition it to bullish. So XLP is going to go from bearish to bullish on one move off this consolidation. XLU, the utilities, also going for the highs. And the XLY also can get a bounce. So sector-wise, you know, we blew out a lot of folks, blew out a lot of stocks. Now we're going to get bounces. Then it will be, are they sustainable or are they really just bounces? And I want to go quickly and look at the commodities here. In particular, the GCC I think I mentioned it here last night. A lot of volume coming into this. I do think this one can move higher. I was looking at gold today. Gold did a big reversal today. Volume comes into it. Now remember, gold was trying to break down on the weekly time frame. Silver already had. Gold test this low, 114.50. They get underneath it, 114.42. They close at 114.61, so they go under, back over. It's going to come back up and do a retest, regenerate, and this is going to be the key piece for gold, because if it can't get over this and instead regenerates lower, then gold is going to blow out these lows and move sustainably lower. So gold has an opportunity here to do something, but it's going to have to do it itself, because right now the onus is on the buyers to do something about it. Junk bonds were trying to break down. They got a nice move back up, and you know, that's probably the gist of all of this. I want to pop over to look at a member question, since we were talking about gold. This had to do with the GDX, and the question there was it bounced off the 2013 low of 2018. So let's pull back to a weekly here. The 2013. So that low, yeah, well, the bad thing about this is that it actually is going to have a lot more volume than that low. So you test it, but you fail to break it, yet you have heavier volume. That usually indicates that you are going to come back and do it again. So from that, that's the first thing. The second thing is how soon, right? Because it doesn't have to do it immediately. So you have a retest, regenerate right here. It came into it on the big move, and these things were all up huge today. This one's up 6 1/3%. That low was 21.93. You got to 21.94 on a close, so you actually close into the low. So the retest, regenerate's happening right now. Now you can imagine if this can't get going. You've got an A point, assuming this thing does bounce further next week. I'm on a weekly. You would have a B point and then a blowout move to the downside if it continues. So you can see how important this retest, regenerate becomes. Because if it does get over it, if it starts trading up here and can hold it for a bar or two, right, then it turns into a range trade, which is a totally different idea than what you see here now. In other words, this becomes the range. And at that point, you would have kind of two ranges inside, one here and one down here. And of course, if you get over this, well, you're into the higher one, which is exactly what you want to see. So big test is going to be this bar. Let's get a price point on that for you. That's on the weekly, 23.02. I think that's the key. I think that's the key area. Now, if I get over that area, I become much more bullish, especially on any kind of little retest back down. So in other words, if I can get something next week that takes me up and over this area, then any kind of test back into this zone would be an ideal place to buy. You don't have a lot of risk and you're shooting for something higher, because then you would potentially have your ABCD the other way, right, to take you into the higher parts of the range. So in a long-winded way, I think that answers the question that was asked. Do I see it heading back to the top of the range around 27? You know, it's got to, this is the key bar, May 26th weekly, and that will be the key bar. Do I think it's going to follow through here? Yeah, I do. Let's go pop back into the daily. So because there's really nothing, there's no volume on the way down. The only volume was the blowouts here at the end. So this can certainly travel. This can certainly travel back up. This is really interesting because here, look at where your retest regens are here. You couldn't even put in a low for the last, what is this? Straight down for 6 weeks. That's pretty pathetic. And what I mean by straight down is if you can't put in a swing point low that says you can't get 6 bars without a lower low, that means you're just heading straight down, right? And that's what this thing did. So, yeah, it can get back up there. But I'd look on that weekly. That's the key bar. If you want to buy, you know, and you get an opportunity, which I'm sure you do given your statement or your question, the buy is here. If you get a push back into here, right, you don't have to risk much, and you're shooting for at least that 23 area, so your risk reward is just a little over 1 to 1, but you know, odds are pretty good with this push that it's going to continue. So a little quick move back down, you know, you can certainly see it get up to 23 pretty easy. And that does look like it will do a full retest regen on the weekly. And I didn't look at that closely, but I believe, yeah, it's easily within 6 bars. This is second bar. So yeah, usually when you have a retest regen that comes within 6 bars, you're going to get a full retest of that bar being retested. So in other words, a full retest would be back on a bearish one, would be back to the highs of that bar, which is the 23 area. Okay, I want to quickly, while I have a little bit of time here, I want to pop over and we'll look at earnings. So I'm just going to type these in and flip through them and see what they look like. The first one is Monsanto. So Monsanto is in that group that got hit off the chemicals, fertilizers. So this got a bounce today. It reported this morning. It was up 1.79%, 109.67. And it closes 109.73. This was after hours numbers, the 67 number. And that honestly doesn't do much of anything for this stock. This is interesting though. I had not noticed this. You actually have a high volume high sitting there on this bar here. So, you know, at some point it probably is going to try to get back up there. That's on the weekly. Let me see what the daily. Let me see what the daily looks like. That's 1:21:23. Let me go back to the weekly. That's off this bar. Yeah, I don't know. It's going to struggle to get back up there now. I think this one, you know, this pop up today really doesn't do anything for it. Let's look at another one. Now Costco did well. They reported this morning. I was watching them today. They actually spike higher. This is the weekly. If we go to the daily on them, you can see the nice spike higher. Volume comes into it. This one's going higher. So Costco looks pretty good. The rest of these, Alcoa was after the bell. Let's see what Alcoa did. Alcoa closes after the bell at 1646, and Alcoa 1646. So they get a little pop after the bell, but that does nothing for it either. It's got to get over about 1650 to get anything going. And on a weekly, yeah, it doesn't look bad. Actually, Alcoa looks okay. Alcoa is actually up here, and you know, it looks to me like it's going to hold this range. So Alcoa looks okay. It can continue in the range there. Let's look at the next one. And we don't have a lot of them yet, but the chemicals was Monsanto, retail Costco, Alcoa, of course, is mining. Bank of the Ozarks. This is kind of a hot banking stock. So they reported after the bell, they closed at 31.26. So nowhere. That's still a good looking stock. I like this stock. It's a stock I've watched for many years now. Another one after the bell got a big bump was RTH, which is Ruby Tuesdays. And this one was up like 20% or something. Buck 21 to 701, which does nothing for this stock. It's just a huge range. You know, if you happen to get it right, you make money. If you get it wrong, you lose. Let me see. Next one, our last one here is ARCW, which is a manufacturer. Now this had a nice pop up. What did they do after the bell? Oh, down 18%, 19%, 1385. So, all right, let's look at the daily. 1385. Wow, that's going to blow away everything and head into the lows. This one is a nightmare. Yeah. So a huge run up. Then this is a worldwide manufacturer, and it looks to me like it's going to come all the way down and test these lows, and there's nothing on them. This stock's fixing to get taken apart. Okay, so early earnings a little mixed. Costco, I would have expected. Monsanto, I would expect it's actually going to fail. Ruby Tuesday, who cares? ARC Group Worldwide, kind of a feel for what's happening. I think industrial is going to have a tough time this quarter. So, all right, I'm going to have to leave it at that. I'm running out of time. I would look for some bounce tomorrow, and then we'll see if they can just kind of grind them up into earnings next week, where the financials report, which should be good. And then that's where we'll probably get that test, and we'll see what they want to do again. Can they V-shape this to the moon one more time? Folks, thanks for joining me. Have a great night. Appreciate it. Take care.